All right, so if you're a beginner trader and you're someone that's interested in, going about maybe trading the NASDAQ futures, the ES futures, or on the micro markets in reference to like the MEX or the MES or any of the other commodity groups or financials or currency groups within the future markets, I like to use, I'm going to share with you the volume profile. It's a good indicator that helps me determine, when I'm looking at structural breaks or breaker structures, whichever direction the market's actually moving. So if it's making higher highs and higher lows, and I'm looking for a pullback to a key area of demand, and there could be multiple areas of demand on the pull, areas with pullbacks to, you're trying to decide which one to actually maybe take interest in or seek. Not to say it's always going to hold that zone, but ones that would just ring the bell to you and say, okay, this zone here is probably going to hold better than the next zone. Pay attention to what I explained to you today in reference to the volume profile, and how I use it first and foremost off the higher base chart to start with. Now, the strategy and how I trade, you guys know, primarily or in most instances is marking up your higher base chart, whatever chart that may be, 120 range chart for me, and then I'll move down to like my 24 range chart, which is my entry chart, to look for a more precise entry point inside that zone. So mark up the higher base zone. So for example, for anyone that's new watching today, if this was, a breaker structure, which it is, a major breaker structure to the upside, pulls back, a key area of demand right here, right? Then I mark this up on my higher base chart. There's a gap or an imbalance attached to it as well. I talk about that here on the channel, all which is part of the strategy. The imbalance is critical because it marks up, or not marks up, but lets you know if that zone is high probability or low probability zone in reference to, demand or supply when the market is pulling back to key areas that break structure. This is a major structure break to the upside. Lots of aggressive buying, taking out a major high over here, pulling back demand. Then I just move down to my lower base chart, like I said, to my 24 range, and then see if I can find a smaller demand zone resting on the inside of the higher base zone. So I'll mark up this zone, and then I'll go over here on NinjaTrader, and I'll click on all charts, right? That way I can focus on it and move down when I move down to my lower base chart to see and wait for it when it comes back, taps into it. I can go ahead and identify that zone on the 24 range chart and then see if there's a smaller zone resting on the inside. You say smaller zone? Yes, I'm looking for a 24 range demand zone on the inside of the 120 range zone that I just marked on a higher base chart. So all it is looking for a higher base zone and then a smaller base zone on the inside of the larger zone, okay? 120 yard and then a 24 range on the inside, okay? So it's just a multi-chart step down approach, but it just provides me more confluence. And not just that, the biggest thing is it gets me into more of a precise entry point. Now today, when it comes to the volume profile, you may be saying, well, what if there are multiple zones within a leg where there's a breaker structure? So if this is a breaker structure off my major chart, off my 120 range chart, I'll just simply use my volume profile tool, and wherever there was like a major high at and the market broke structure to the upside, right, I'll mark at here's the high, here's the low it made, and there's where it broke structure, right? So there's a demand zone here, and there's a demand zone resting right here. So you say, which one, would you be more interested in taking? Well, I'll draw it up, okay? And then I'll focus in on both areas and say, okay, there's a good amount of volume here, also down here. So the market can attempt to test either one of these zones. And there's aggressive buying coming out to the upside right here. Now, as you can see here, the market came down and tested the zone. I would scale down to my lower base chart to see if there's a smaller zone resting on the inside. But looking at volume here, there's a nice spike in volume right here, or where volume accumulated off this little zipper here on the 120 range chart. If you move down to the 24 range, you'll see where this may be, more price action. There'd be, a lot more movement in this small little zipper here. Same thing down here. So I look at these areas and where volume has accumulated at and mark off the demand zones there. Like I can mark this one and this one, but the market reacted. So wherever it reacts at and I get my rejection at, I'm just not jumping into a trade off the 120. I can, I've done it plenty of times. I'm not saying not to, but that's for anyone that may have, more capital to trade with, and you don't want to kind of spend all that time zeroing into a, maybe a 24 range chart. You want to take it from a higher base chart. You could do it, but one thing for sure is that you're probably going to incur a little bit of drawdown more likely before the market moves in your direction. So you got to be kind of spot on. And that's the reason why I like using the two chart confluence step or process. Okay. So the market comes here. I marked it up. I'm looking at this area here. All right. Major breaker structure to the upside. Demand zone resting right here. It comes down to it, reacts, boom, blast to the upside. Then what does it do? It takes out this high now. Now the high that it just made up to the upside here where it broke structure it and pulled back. Then now it makes a new high to the upside. So then again, I can use the same tool, my volume profile tool here. Mark this up. Okay, from wherever it made the high at, now we have a low. Now it's broke structure to the upside with aggressive buying to the upside. Look what it does. It comes back to the zone marked right here, right? Okay. Now, typically speaking, if I look below, there really aren't multiple zones. Well, there's high probability zones. That's what I'm trying to say. Because if you look below here, these are low probability zones because they've already been tapped. Okay. So this is a high probability zone right here. I believe there's a very small imbalance. I'm sure there is because that's the reason why I marked it up here on this zone. Yes, there is right there on this candle right here. So there's a very small gap on that on that zone right there. So if you see, this is an area where volume is as well. So the market comes back to the zone, it's coming back towards an area of volume. Now I typically like for interested in going long, for price to pull back to a volume area and look for the market to pull below the area of volume within the zone. Okay, I like to buy the lows and sell the highs. So I like to buy the lower portion of a high volume area and sell the upper portion of a high volume area. But again, we're aiming for an area where price can pull back where this majority of the volume is, or a large volume area is back at a demand zone. Okay. This is another demand zone. Now here's an instance where you have a supply zone resting right here. So we have this high right here, this low right here, broke structure over here to the upside, took out that major high. Now we have a major high here. The market comes down. So now there is what? There's a leg to the downside right here. But before that leg, there's a nice swing to the downside. We have a low, lower high, breaking structure here to the downside. If I was interested on this area of supply right here, then I'll do the same thing. You know, go up here. Okay. All right. So I'm drawing it from where nice aggressive push, the swing on the back end. Okay, it's the back end of the swing, and then aggressive push to the downside right here. All right. Now, one thing for sure, what you can also do is because there's actually multiple, and as you can see, there's a high volume area back up here is what I was trying to say. That's why the zone is drawn there. But let's say this was a leg to the downside, and you have multiple like supply zone. There is a supply zone resting right here. There's another supply zone resting right here. So then draw it from the most recent high, or the last high that it made, major high that it made, down to the most recent low that it made. As you can see here, which one makes more sense to you? You know, to me, I'm aiming for where there's more volume at. Price likes to move to areas where there's volume at. Okay, it's like like a magnet that's attracting price back to it. So there's not much volume on this leg to the downside down here at this zone, but back up in here there is. So as you can see, the market comes back up here. This is already a high probability supply zone where there's a small imbalance or gap attached to it. It taps in. Remember what I said? At the upper portion of the high volume area, I like to look to go short at the upper portion of a high volume area versus right at a high volume area. Not to say it won't react, but it's all about the leg that it made. If there's multiple zones, draw that leg up to see where it could possibly come back to. Yes, there are multiple zones, but this makes more sense because there's more volume in this area here than there is down here. And that's kind of how I filter out and weed out, and it helps me, this tool, to kind of, give me more confluence. Now, I'm not just using it 100%. Oh, okay, this is the area 100% I'm going to focus in on once price gets back to it. But it basically allows me to see behind the sheets as far as where I could possibly, based on probability, take a shot from or mark up a zone that makes more sense overall. Okay, more volume back at a nice supply or demand zone where there is volume at. I'd rather take that than something where there's lower volume at, if that makes sense. I'm not saying 100% of the time that they cannot, reject at a lower area of volume. Of course, they came back right here. They gave some rejection right here. They rejected at 549. They came down here on a pullback to 513. Not a lot there, but it did react. But what makes more sense in this area right here, push down, okay, aggressive selling, pull back, more aggressive selling. A lot of aggressive selling came out of this area right here. And, price, as far as structure, there was a little bit more structure in this area of this zone, of this swing right here, on the upside right here versus down here. Okay, so that's what makes sense to me right there. Now, if you're someone that wants to trade breakdowns to our breakdown, the setup so you can understand the multi-chart confluence strategy, meaning marking up a higher base zone off your higher base chart and then scaling down to the lower base chart. I've got tons of video content for anyone that's interested in becoming an elite channel supporter. Thank you for everyone that is, basically a loyal supporter and has joined that group. You basically support my efforts as not only a trader, but as a content creator. And through the YouTube tier membership program, what I do is I'm able to give back perks and rewards. So making those tons of video contents where, trades that I've taken and posted over on the Discord, those I go down and I break them down for the elite group. It's a private community for anyone that's interested. It's only $6.99 a month. That's, again, $6.99 a month. That's all it is. It's not $699, a month or a year. It is just one basic not flat fee, but $6.99. It's just monthly. That's all it is. Okay. Very inexpensive. I know a lot of people probably pay that for price a cup of coffee on the day. You add it up weekly. What do you end up spending? So $7 a day times $5, $35 a week, or $50 a week on coffee. Each time you stop somewhere, right? On a weekly basis. We're talking about on a monthly basis, something that could change the way and your outlook of actually how you trade and put you in a better position. Now, if it doesn't work, you haven't lost much at all. Just, move on. Okay. Now, I'm just here to share with you my experience and how the strategy and how I trade. Now, there are tons of other individuals out there that push content and push videos and sell programs and things like that. I'm not here to do that. I just want to really share with you the way that I actually trade and how it works for me. Give it a shot. If it doesn't work, then move on. That's simply put. Okay. Not everything is going to work for everyone. I know that, but giving something a try or test to see if it's going to work, or maybe help you put you in a better position, then give it a shot. That's what I say always, right? If it don't, I just move on. But I'm not going to sit here and pay hundreds of dollars or thousands of dollars into something that's just not working for me. Okay. So I just want to put that out there. Anyone that's interested in becoming an elite channel supporter, the link is down in the description portion of the video, right below the Discord link. The Discord is free to join. Right below that link, you'll find where it says elite channel supporter. Click on that. 2 tiers will pop up. Make sure to choose the one for $6.99. And there you are. You're in. You get access to tons of the trade breakdown videos, plus the video playlist and the great video that I covered on market structure for anyone that's struggling with that concept as well. All right, so let's move on. All right, so the market reacts at that area there. So at this point here, we kind of started moving back to the upside, as you can see right here. We started breaking structure back to the upside, taking out structure here and taking out here. So we're in between this high and this low right here, as you can see. So this is the major high, this is a major low. The market's trying to figure out which way it's going to move, but then it starts to do what? Starts to come back lower, makes a low, aggressive selling, pull back, more aggressive selling. So I marked up this area right here from this little high right here coming down where this low is at right here, because this is a structure break to the downside. And it's not just that, but it's also a major area where there's a supply zone at, okay, where there's a gap or imbalance attached to the zone. You want to have that imbalance attached to the zone or gap, because that's going to mark up if the opportunity or the zone is going to be high probability or low probability. I like taking high probability setups. So push down, aggressive selling, pull back, more aggressive selling, pulls back. Here's the high volume area. Again, the market likes to come back to the high volume area, and right above it is a supply area. Okay. I like to go short above a high volume area, of course, yes, and take my shot going short. And that's what I'm looking at when I am trying to filter out what's going to actually work for me or what makes more sense to me. Again, like right here, the market starts to turn back around. There's a major high resting right here, low right here. Aggressive buying, pull back, more aggressive buying to the upside. Yes, it makes sense to look for something right here, but it's the low probability zone right here, and you have high volume right here, right? So this would be, if this was a high probability zone resting, let's say it was right here in this area here, right? And the market pulled back to it, then I'd be interested in taking, a shot going long. But this is a low probability zone right here. But it did react on it. The market will react at low probability zone sometimes, but I'm focused on taking the ones that are more high probability. Just makes sense to me. But I'm simply trying to show you that aggressive buying, okay, pull back, break structure above this area here, it pulls back. High volume area here, it pulls back to that area of volume there, slightly right below the high volume area, reacts at it, and then you can take a scalp going long if this was a high probability zone for me, okay? Now, sometimes, even low probability zones, they can hold up. That's when, too, I talk about in videos, move down to the lower base chart. See if you have within the low probability zone off the higher base chart. See if you have a 24 range, a lower base chart zone on the inside of this zone here that you would mark up. That's high probability, and then you can probably take a trade from there. All right. But I just want to share this with you guys today. Let you know about the volume profile, how I use it. Anyone, I mean, a lot of people don't trade 5 days a week. Some people trade 3, some people trade 4 days a week. Whatever works for you when it comes to trading futures, and you don't need to be honest with you, because if you could pick up, say, trade 3 days a week and pick up accumulate a nice amount of points, then you can take a day off or 2 days off during the week. You just extend your weekend time off. Okay, maybe you want to trade Monday, Tuesday, and Thursday. Don't trade Friday. Have Friday, Saturday, and Sunday off every single week. Would be nice, right? You can definitely do that, or trade 4 days a week. Whatever you want to put into your trading plan, that is up to you. But I just want to show you this too, the volume profile. The one I use is from a company called discotrading.com. They are no longer in business as it stands right now because of sanctions overseas with things going on. But, I'm still able to use it because the servers are still up and running. It's just for existing customers, but you cannot purchase it right now. Now, NinjaTrader does offer one through their order flow suite package for anyone that has a lifetime license. You can use that too. Actually, I have access to it. Let me see right quick. I believe I can show you order flow volume profile. Let's say I was to draw it from, again, let's see, from this area here down to here. You see how it draws it up for me? So I'm able to use that one if I choose to. Again, it's above the high volume area here where the volume's at. Go short, right? Same thing. I could do it right here if I wanted to. Again, all right. Aggressive buying, pull back, boom, pushes to the upside. The volume's right here. It comes back to a zone, maybe right here, and you can use that. Again, NinjaTrader offers this tool just as well for anyone that has the lifetime license. Okay, I have lifetime license, so I'm able to use it if I choose to. Okay, but years ago, when I first started using NinjaTrader, they didn't offer that order flow suite, and they didn't have the volume profile tool as part of the package. Now they went back and reworked some things, and it's a decent tool. Okay, it works just the way I use the other profile that I use through a third party provider. Okay, but outside of that, that's all I have for you. Okay, anyone interested in becoming an elite member and gaining access to that additional video content like I talked about? Yes, with the trade breakdowns, you do receive. I talk about the in the trade breakdowns, stop loss placement, profit target areas, talking about structure, and explaining to you why I took these setups. Okay, that helps people, because when you are able to hear someone explain the strategy and walk you through setup after setup, and you grasp an understanding why that individual took these trades, you can focus in on setups like that for yourself. All right, not to say again it's going to work for everybody, but spend some time. We've had tons of people, members that have been part of the Discord community that have found success and still to this day are doing pretty well themselves, and lots of them doing very well. And then some have gone, some have come, and some have gone. I don't expect everybody to stick around. Once you learn what you learn, why not move on? Start becoming successful and profitable yourself. So again, the link to become an elite channel supporter is down in the description portion of the video. If you're not a current subscriber, please take the time right now. Go ahead, click that subscribe button as I am speaking, and also make sure to turn your post notifications on by clicking that bell once you click on subscribe, so that you never miss one of the uploads here on the video. Okay. Now, if you found value in today's video content, I just ask of you one solid favor. Make sure to click on the like button, click that thumbs up button before you sign off here, or click off the video. I definitely appreciate it. It helps get this information, which I'm talking about, out to, the right hands, individuals that are wanting to, grasp an understanding about supply and demand, simple ways of trading, using chart confluence or confluence as a whole, because the more confluence you have on your side, the higher the probability is that a trade is going to work out in your favor. That's all I have for you guys today. I'm going to go ahead and sign off. For anyone that had a great trading day today, I actually took off today, and I've been looking at the markets. I just didn't really trade it today. And looking at it, yeah, there was, on a 120 range chart, we didn't, there wasn't much going on. Some people I saw over the Discord were kind of scaling down a lower base charts, not to real lower charts, but they were scaling down a little bit to find some entry points. Nothing wrong with that. Just be careful and make sure you got confluence to cover that trade or provide you more confirmation. But that's all I have. Appreciate it. Trade safe. The rest of the week, we got Thursday and Friday, and that's going to do it. Take care. See you in the next one.